What is accounting? Accounting is a process of recording, classifying, and summarizing financial transactions in a significant manner, and interpreting results thereof. Balance sheet, trading account, profit and loss, cash flow. Statements, funds, flow statements. Classification of accounts in accounting: 1. Personal account. 2. Real account, tangible. Real account, intangible. Real account. 3. Nominal account. Accounting rule: personal account. These accounts types are related to persons. These persons may be natural persons, like Rajkumar's account, Hitesh's account, Ramesh's account, Dinesh's account, etc. These persons can also be artificial persons like partnership firms, companies, bodies corporate, an association of persons, etc. Rule for this account: debit the receiver, credit the giver. For example, Rajkumar and Hitesh Trading Co., charitable trusts, XYZ Bank Ltd., C Company Ltd., etc. There can be personal representative accounts as well. For example, in the case of salary, when it is payable to employees, it is known how much amount is payable to each of the employee, but collectively it is called as salary payable account.
Accounting rule real account. These account types are related to assets or properties. They are further classified as tangible real account and intangible real accounts. Real account rules: debit what comes into the business, credit what goes out of business. Tangible real accounts. These include assets that have a physical existence and can be touched. For example, building account, cash account, stationery account, inventory account, etc. Intangible real accounts. These assets do not have any physical existence and cannot be touched. However, these can be measured in terms of money and have value. For example, goodwill, patent, copyright, trademark, etc. For example, furniture purchased by an entity in cash, debit furniture account and credit cash account. Accounting rule nominal account. These accounts types are related to income or gains and expenses or losses. For example, rent account, commission received account, salary account, wages account, conveyance account, etc. Rules: debit all the expenses and losses of the business. Credit the incomes and gains of business. For example, salary paid to employees of the entity. Salary account will be debited when the expenses are incurred, whereas when an entity receives any interest, discount, etc., these are credited whenever these are received by the entity. There are some other accounts in accounting as well. Cash account. This account is used for keeping the records of payments done by cash, withdrawals, and deposits. Income account. Purpose of this account is to keep the record of the income sources of business. Expense account. This account tracks the expenditure of the business. Liabilities. If there is any debt or loan, then that amount comes under liabilities. Equities. If there is an investment of the account owner or common stocks, retained earnings, then these will fall under equities. Examples entries on types of accounts. Write the accounts affected and applicable rule in the below-mentioned transactions: goods purchased for cash, cash sales, sale of fixed assets, payment of expenses. Answer: 1. Debit purchase account and credit cash account. Rule applicable: debit increase in expense or an asset, credit decrease in assets. 2. Debit cash account and credit sales account. Rule applicable: debit increase in assets, credit decrease in revenue or assets. 3. Debit expenses account and credit cash bank account. Rule applicable: debit increase in expense, credit decrease in assets.
These contents only for education and knowledge purpose, and thank you for watching. Please like and subscribe my channel.